Tyson Foods, a company operating a handful of food brands, mainly operating in the US of A. Food should really just be replaced with protein. This company likes its meats. This company gets the most of its revenues from selling beef, chicken and pork, while some of the revenues also come through prepared foods and other categories. We talk about this stock today not because it had such a stellar performance in the last couple of years. In fact, if you had invested in Tyson Foods 5 years ago, you would still be slightly negative today. No, we're definitely not talking about Tyson Foods because it has such a great run-up like some of the other names out there. We are talking about this company, Tyson Foods, today because it might have a very bright future ahead of itself as an investment. Maybe even a 6x return or a compounded average growth rate twice that of the historical average of the S&P 500. Let me explain. The setup. The potential reward that this stock currently possesses consists out of two parts. They are 1, the underlying profitability growth, and number 2, the multiple expansion. I know, fancy words, but I will explain both in depth. Most importantly, I believe that Tyson Foods has both these effects working at the same time, like two engines working towards the same goal. Let me explain through a fictional company. Currently, our company makes $1 in earnings per share, so that's $1 in EPS. Also, shares of this company can be bought for $5 on the stock market. And that means that the company is currently trading for a price to earnings ratio of 5, since the stock is 5 times as expensive as 1 year of profits. Now, what if the company grows all the way to doing $5 in EPS in 2032, so 10 years from today? If on the stock market this company would be valued at the same price to earnings ratio, well, then the shares of this company would be worth $25 10 years from today. That amazing fictional 5x return all comes from earnings growth. So that is an example of how an investor might profit from underlying profitability growth. But what if the company didn't just grow its earnings over those 10 years, but what if it also became more highly valued on the stock market? For example, what if our fictional company was trading for a price to earnings ratio of 15 instead of 5 by 2032? Well, then the company wouldn't be worth just $25, it would be worth $75 per share. So all of a sudden that 5x in earnings growth actually results in a 15x return on our investment. And that is the power of multiple expansion. More specifically, earnings growth and multiple expansion at the same freaking time. So if we can find companies that both experience underlying earnings growth as well as multiple expansion, that is where the real returns can be found. And I believe Tyson Foods might just experience both. So let's talk about the figures that you saw in the thumbnail. First up, earnings growth. We're looking at a company with a healthy track record of growth in profitability. In fact, if we compare their 2011 EPS with the $10 they most probably will churn out in 2022, we can see that the company has grown their profitability at a solid 15% compounded average growth rate for over a decade already. Sure, that ain't no Tesla figures, but it is still a really solid return. If the company can continue the growth at a similar pace, say for example 10% per year, that would be outstanding. Also important to note, the company actually does have the free cash flow to back up its EPS. Meaning the company isn't just profitable on paper, it actually rakes in all the cash it claims to be making. The second number you saw in the thumbnail was share buybacks. This is where a company is able to increase their earnings per share over time by decreasing the amount of shares outstanding. And as we can see here, the company had about 413 million shares outstanding on a fully diluted basis in 2015, while they have just 365 million shares today. That is a decrease of about 2% per year, compounded. Really nice to see. So going forward, it's probably safe to assume a 2% growth rate in EPS from share buybacks. And the last one, multiple expansion. Today, the company is trading for just $68 per share, while again, the company is right on pace to make $10 in EPS during 2022. So if you were to invest today, you are paying just 6.8 times current earnings. And that is where I believe the remainder of the returns will stem from. You see, stocks over time tend to average around that 15 mark for PE ratios. So over the very long history of the S&P 500, stocks tend to average around that 15 times earnings price point. Again, this bad boy of a stock is trading at just 6.8 times earnings. So another 8% per year could be had if this company goes from a 6.8 to a 15 PE over a 10-year period. And that is where all the numbers of the thumbnail come from. 10% from earnings growth, 2% from share buybacks, and another 8% from multiple expansion. Those numbers could shoot up this stock to the freaking stratosphere in just a short decade. If these numbers are even remotely close to what Tyson Foods will do in the future, we might just see Tyson Foods trade for $420 per share in 2032. And that is how I got to that 6 to 7x return in 10 years. Again, nothing to sneeze at. So that is the reward. But investing is about balancing the risk versus the reward. The reward is that 6 to 7x. But what is the risk? Risk should be thought of as the risk of losing capital on the long term. With this company, I only see that realistically happening for one reason: bankruptcy. So what is the chance that this company goes bankrupt over the next 10 years? The company could go bankrupt if it had significant debt that it couldn't pay. But as we can see here, the company has just $8.2 billion in long-term debt. Just during the first 9 months of this year, the company earned $2.7 billion in net income. So at that pace, the company could pay off all their long-term debt with just 2.3 years of earnings. To me, it is unlikely that this company will go bankrupt thanks to their currently held debt. Besides, look at this freaking balance sheet. Shareholders' equity of 19 billion, cash of 1 billion, they will be fine. Moreover, this company is actually hella profitable. This year, with all the inflation pressures going on, this company actually had a net income margin of 6.9 freaking percent. Nice. That is higher than in 2021 or any other year that I've personally looked at. So in an inflationary period, this company has been able to increase their net income margins, while they are supposed to decrease. That is pretty darn insane. So no, the current debt isn't really a problem, the balance sheet is pretty clean, and the company makes plenty of profits. But of course there are still risks to this company. I just don't really think they're of the bankruptcy kind of risks. To me, Tyson Foods seems like an investment where tails I win pretty darn big and heads I don't lose much. But full transparency, I ain't no financial advisor yet, and this video certainly isn't financial advice. Moreover, at this moment in time, I do not own a position in Tyson Foods, but I might buy Tyson Foods in the near future. And with that said, thank you so much for watching. I love you all. Peace.